Hi there, StoneCo has reported the results for the second quarter, and they were great. Their earnings have rebounded, and they expect more growth in the future. But the stock price, as you can see, is still down, over 80% from its peak. By the way, their profits are about the same as they were in 2020. But as you can see, the stock price is still down. So StoneCo may be a good opportunity at the current level if they keep growing in the future. The market cap is around 3.8 billion and it might double, or even more. So let's see the results, their future outlook, and at the end, its fair value. How much money you can expect from the current level. As you can see, revenue is expected to grow even more, from 2 billion to almost 3 billion by 2025, and their profits or earnings are expected to rebound, from a loss of 90 million to a profit over 200 million, which is expected to increase even more in the future, to over 300 million by 2025. Of course, these are just the estimates. Their profits may be even higher. If you look at their future free cash flow, it is expected to be even higher than their earnings, around 800 million by 2025. And if the market values this business based on their free cash flow, then the market cap can easily go to over 8 billion or over 16 billion. It depends on their future growth. Now, if you look at the second quarter results, you can see that the revenue has increased year over year over 28%, so that's great. Their profits have increased a lot, almost 6x year over year, so that's an amazing performance. And they expect even more growth in the future, so that's great. Maybe you know that StoneCo has two main segments: financial services, where most of the revenue comes from, and software. And if you look at the revenue, you can see that it has increased over 40% year over year, and also the profits have improved. And for software, their growth is slower, but still they delivered a growth rate over 9% year over year, and also their profits have improved. So the results are great, but as you can see, the stock price is still down, and this might be an opportunity. Let's continue. Another opportunity that StoneCo has is their banking segment. As you can see, their active clients have increased 3x from the last year. They have around 1.6 million clients, and that's great. And they are trying to launch their credit cards, which will bring more revenue in the future. They tried that in the past, but because they took on more risk, they lost more money. That's why you see this decline in their earnings. But now they're starting again, and they're focusing more on the risk. So you might expect more growth in the future from this segment. Now, the most important metrics are their total revenue and income, of course, we all know that, but they have other metrics, such as total payment volume. If this number is growing, they'll make more money because they charge merchants a tax rate, which is around 2%. And as you can see, their total volume has increased year over year by 7% and quarter over quarter by 4%. So their business keeps growing. Not that much, but it keeps going up. So that's great. And if you look at their clients, their growth rate was amazing from micro and small and medium businesses. Year over year, they deliver 42% and quarter over quarter, 7%. So that's amazing. Of course, the most important metric is the total payment volume. This is the growth that you can rely on. Plus, they also have their banking clients, where their growth rate was amazing, over 200% year over year. And also the growth rate for deposits was over 40%. So the business is doing quite well. And their future outlook is that they expect for the next quarter around 3 billion in revenue. Be aware that these are Brazilian reais. The total payment volume to be around 88 billion. And of course, this EBITDA, you can ignore it. Focus on the net income. That's the most important metric. Now, let's see the fair value of StoneCo. First, the risk. If their future growth stops, then the fair value may be around 2 billion for a 10% annual return. This may happen because of competition. Be aware that they compete with PagSeguro and Mercado Libre, another great company. So this risk may happen, and you have to be aware of it. Now, the upside, the great scenario, if StoneCo delivers more growth in the future, then the fair value may be around 4.1 billion at the current level. So for 10% annual return, the fair value may be around $14. So the current level, the stock price is undervalued. And if you are confident that StoneCo will deliver more growth in the future, then it might be a good opportunity at the current level. By the way, these are their future earnings, not their free cash flow. So I have to change it. In the normal case, where StoneCo may improve their business, the fair value will be around $3 billion. Here you also have a margin of safety. So the current level, the stock price is a little bit overvalued. Moreover, you also have to be aware that there is a lot of competition. If they compete with more players, then the take rate may decrease, which will affect their revenue and also their profits. So if there are more players in that industry, they have to charge less in order to compete with other companies. That means the revenue may be lower and also their profits, and that can affect their future growth. I'm not sure if StoneCo will grow a lot in the future, I mean in the next 10 years, because of competition and technology is improving day by day, which can affect their business model. So that's why you have to focus on the risk first. See if you like this business, their future outlook, and you might take advantage at the current level. As I said, if they keep growing, the stock price is quite cheap at the current level. But don't forget the risk. And if you have any questions, please let me know in the comments.